Now, the way me I like to the name of my strategy is liquidity concept. I trade basically liquidity with SMC. Some people call it advanced SMC. Some people call it liquidity concept. But the way my own strategy works is I trade SMC with liquidity because liquidity is like like a trap, like a zone that market need to take out, stop loss that market need to take out before it make a reversion, before it starts moving into an opposite direction. Now, the type of market structure liquidity that me I like to trade is, but first, do anybody know what I mean by SMC here? Because I don't know whether I'm sure there will be some support and resistance traders here.
Yes, boss.
Okay. Now, let me give you guys the type of SMC liquidity concept me I like to trade all the time. Now, I don't know about other traders, but this is how me I like to trade my liquidity. Let me draw them out for you. So this is for the bullish version and this is for the bearish version. Now, there's one too again that I also like to trade. These are the Let me draw them out for you again. Sorry. And if there's a little bit of time, I'm going to quickly explain this BTC trade that I caught today. This BTC trade. And these other ones, these are the four. Actually, I like it's four, but mainly it's five. Five liquidity trap I like to trade. Now, these are the five type of liquidity patterns me I like to trade. These are the five. Sometimes I like to name them. The way me I name them for my students is I call this the cool pattern, the hot pattern, the blue pattern, and the happy pattern. I just like to name them. So in case if I drop a setup in the class, in the VIP session, if I drop a setup, so if I say this is the type of pattern that market is showing, so they will know which type of liquidity pattern I'm talking about. This is the happy pattern, the hot pattern, the blue pattern, and the happy pattern. Sometimes I call this the white pattern. Now, let's say in a market, let's start in the type of structure we have. We have the bullish market and we have the bearish market. Now, so anytime market is in an uptrend, market tends to grab a low before making the main move. Market tends to grab liquidity before going bullish or bearish. And what would that mean by liquidity? Trap, where SMC traders, normal SMC traders, once the normal SMC, they like a break of structure. We have a break of structure here, right? A break of structure. They'll be using this as their order block because that is the basic SMC traders. A break of structure, market will trace back to an order block and start going bullish. Again, a break of structure, market will trace back to an order block, then start going bullish. But we liquidity traders, this sometimes you will see markets come back, hit their stop loss, create a trap, hit their stop loss, then start going bullish. Market tends to do this all the time. Market tends to do this all the time. Also, in a bearish structure, market will be in a bearish trend, creating lower high, lower low, lower high, lower low, lower high, lower low. Market will come back. Normal SMC traders saying this market will reverse to your supply zone. Reverse your supply zone before making those lower lows. But sometimes you see market hit their stop loss, trigger their SL, tap into the main order block and start going bullish. This guy right here now, that market swept the lower high. I called it inducement. You can call it liquidity. You can call it inducement. Inducement is like a trap. It's like a trap that market tends to hit, like markets rush into their, markets moves with money. If market did not absorb money, it will not move. If market did not absorb liquidity, it will not move. So markets seek for liquidity, which is money, before it makes the move. So you see markets come back, hit their stop loss, absorb those liquidity, those their SLs, absorb those liquidity, then start going bearish. So if sometimes you are in a trade, then you take your entry at this level, then you say your stop loss should be at this high. If market comes to your SL, it means that you are the liquidity. You are not able to spot out the main liquidity that market is trying to trigger. So if you are trying to take a trade, now you see the market hit your SL and start going into your direction, it means you are the liquidity. Now, how do you spot those liquidity now? How do you spot them? Now, let me go into that. Now, let's say you are in a bullish move. You are in a bullish trend, rather. You are in a bullish trend. Now, the way I like to trade my liquidity is that I wait for, let's say, market is in a bullish move. Let me draw that for you guys again. Market is in a bullish trend. Market is in a bullish trend, creating higher high, higher low, higher high, higher low, higher high, higher low. My liquidity, to make sure that my own liquidity is valid, my liquidity should come into the 50%. It should not be, it's not all the time. It should not be like market should be above the 50%, or the market should come back into that break of structure zone. It's not a must. Market should be below the 50%, or market should be above the 50%. But make sure that market comes into your break of structure zone. It can be as this, it can be as low as this, it can be as low as this, but make sure your liquidity comes into that your break of structure zone. Before that is how I mark out my liquidity. Make sure that your liquidity, the inducement, should come back into that zone. Then market break structure. This is called structural liquidity here now. Break of structure 1, break of structure 2. Break of structure 2 low is your liquidity, your trap, your inducement. So if you are trying to take a trade and you could not spot out any liquidity, it means you are the liquidity. It means you are the liquidity before markets make the main move. So anytime you are analyzing the chart, make sure your liquidity is either below the 50%, or market reversed into that your break of structure zone. If you cannot spot out the liquidity, it means you are the liquidity. So this is for the bullish market. Now, for the bearish market, goes the same way. Market is going lower high, lower low, lower high, lower low, lower high, lower low. Then you see market coming back into your order block, coming back into an order block, creating some kind of move, like creating market is losing, gaining momentum, not losing momentum, gaining momentum. Then market come back, hit your stop loss, then start going bearish. For main for normal SMT traders, you'll be seeing this is their order block. This is their order block, and they tend to put their SL at this level. Markets will come back, hit their stop loss, then you start seeing markets going in the main direction. So liquidity concept is very is like is the best. I'm not saying it's the best strategy, but to me, it's the best strategy for me that I like to trade all the time. Now, let me go to the as this now. The type of patterns I like to trade: the cool pattern, the hot pattern, the blue pattern, and the happy pattern. That is, I've talked about market structure. I've talked about market structure. I've talked about liquidity. Liquidity. Now, in this scenario right now, that market is not coming back into that your break of structure zone. Market is not coming back into your break of structure zone. Now, these are the rules I like to follow anytime I'm seeing this type of market, anytime I'm seeing this type of structure. What do? I wait for market to mitigate my order block. Then I go to a lower time frame for my confirmations. I go to a lower time frame for my confirmations. Now, what are my confirmations? Let's say market is in a, like this scenario now, market is in a bullish trend, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Now, let me draw that very well for you guys. Let me create it again. Have higher high, higher low. Now, what do I pay attention to anytime I'm seeing this in the market? What do I pay attention to? Liquidity. Like this now, this is the first break of structure we have here now. This is first break of structure. Then you are seeing this type of trend that you are anticipating this to be your liquidity. This guy should be your liquidity. This one should be your liquidity. Then what are your confirmations? You go to the lower time frame and look for that same structure. That same structure, this type of structure, these are on the lower time frame. It can either be this, like this, price mitigated swept liquidity, which is this low, then break structure, tap into an order block, then go bullish. This is the confirmation I like to trade anytime. This is type of confirmation I'm to look for at this level. This is my type of confirmation. Guys, grab this liquidity now, which is this low, then break structure. On the lower time frame, you can use the 1 minute or the 3 minutes. But I make use of the 1 minute time frame. I'm talking about this scenario now. If you're having this, that market did not retrace back into that break of structure zone. Your confirmations, these are the confirmations you should be looking for. Market grabs liquidity. Go to your lower time frame. Go to your lower time frame. Then look for a break of structure towards the upside. This is it now. Let me draw it out again. Market grab liquidity. Tap into your POI. Then we are seeing this. We are seeing this. Now, this is the confirmations I like to look out for anytime I'm trading this scenario in the market. Market comes, grab your liquidity, Then I go back to my 1 minute time frame and look for this confirmation. A break of structure towards the upside. Markets retrace back into that other block. Then I take my trade immediately. Then markets start going bullish. I'm talking about this scenario now. If markets did not retrace back into that your break of structure zone. Hope you guys are getting what I'm saying. Yeah, that's what I'm saying. Okay, okay. I'm talking about this scenario now. If market did not retreat back into that your break of structure zone. Now, let me recap. I've talked about market structure. I've talked about this liquidity. I've talked about the type of liquidity that me I like to trade. The cool pattern, the hot pattern, the blue pattern, the happy pattern, and sometimes I call this the white pattern. I call this the white pattern. So let me talk about POI now, point of interest. But first, let's analyze this chart right here now. Let's analyze this chart. No, I think we should go for a POI now. So we can, these are my rules. Let me lay them out for you guys. Ah, okay. Now, these are the rules. These are the type of setup. Setup. These are my rules. Structure, liquidity, POI. But first, but first, I'm going to explain the type of POIs in next on Wednesday. But I'm going to explain the type of POIs I like to trade on Wednesday. But we cap on this structure and liquidity. Let's look for them on the chart now. Let's look for them on the chart. Now, today on BTC, I can identify that this is a break of structure towards the upside on the 5 minute time frame. Then once market was come, I can identify that this is the structure that market is trying to create right here now. Let me draw it out for you guys. We have this. We have this break of structure. I have this, this, this. As market came back into that my break of structure zone, it gave me liquidity, POI. Price tried to mitigate the POI right here, but it not got mitigated. Retraced a little, tap that liquidity and start going bullish. Now, let me bring out the stop for you guys. As you can see, my liquidity is very, very close to my POI. My liquidity is very, very close to my POI. That is why anytime you are taking a trade, make sure your liquidity should be very, very close to your POI. Now, this pattern that occurred right here now, market is to break this high. If I'm to say it's a cool pattern, if I'm to say this is a cool pattern that market is trying to create now, market did not break the high. So which type of pattern is this now? Let me draw it out for you. Let me draw it out. So you guys need to pay attention to these patterns. So anytime you see them in the market, you will not get confused. Now, this is the pattern market created right here now. This is the pattern that market created right here now. We have a break of structure towards the upside. As market was retracing back into your P high, market gave you liquidity before tapping into this P high, before tapping into your order block, your point of interest. I'm going to talk about point of interest on Wednesday, but let's analyze few trades. This right here now, this is the pattern that market created on BTC today. Now, why didn't I use this guy? Wait, now, why didn't I take my, some of you might ask me, why didn't I take my TP at this high? Why didn't I take my TP at this high? Because we have a break of structure right here now. This is a break of structure also. This is a break of structure. This is our liquidity. This is a liquidity right here. And this is a PY, which is the breaker block. No, I think this is the PY. Yeah, because this is the breaker block that is very, very close to liquidity. Now, which pattern is this guy for me? Why did I take my TP as this high instead of this high? Why? Because this market is trying to give me, market is creating happy pattern right here, which is this guy, liquidity before a break of structure. And as you can see, my TP was at this high, not this main high. Not this main high. I actually dropped this analysis I do drop signals. After this class, I'm going to share you guys a group where you can join. That is where I'm going to be dropping my analysis on every trade, every day. But first, why did I take my TP at this side? Because I have an happy pattern that is forming right here, which is this guy. I have liquidity. Where is my liquidity? This guy. Liquidity before a break of structure. As markets break this low, it gave me liquidity before a break of structure. Let's use a line chart and see the difference. As you can see, before a break of this low, we have this liquidity. We have this liquidity. That was this why I took my TP at this high, not this main high. I target liquidity, not higher high, not the main higher high. I target liquidity. Now, again, can you see any pattern that is forming right here now? Can you guys see any pattern that is forming right here now? Let me draw it out for you guys. I'm seeing this. This is structure right here now. I have this. I have this, then this, and this. Let me draw it out again. This is exactly what I'm seeing in the market, not that. This is it. The hot pattern. Now, let me bring it out. We have a break of structure right here. We have a break of structure. Then we have liquidity before a break of structure, before our main POI. Before our main POI. Markets broke this low. Then as market was coming back into that our level, some people might say this is a liquidity grab. Some people might say this is the type of pattern. I know some guys here that will say this is what they are seeing in the market. This is what they are seeing in the market. You guys are not wrong. You guys are not wrong. You'll be saying this is a liquidity gap. This is a liquidity gap. This is your liquidity. Then this might be your POI. You guys are not small, but what me I'm seeing in the market, this is exactly what I'm seeing in the market. A break of structure occurred right here now. A break of structure, then liquidity before my POI, which is this guy right here now. Liquidity before my POI. A break of structure towards the downside, liquidity before my POI. So that's exactly what price did right here now. Did. Now, I'm guessing some people have questions. We're having like 5 minutes left. I want to make this Zoom call very short so I don't bore you guys. So this Zoom call is like just 30 minutes. Do you guys have any question? We're having less than 5 minutes left.
Good evening. Hello,
Yeah,
can you hear me?
I can hear you.
Okay, good evening. Thank you for this call. So my main question now is when you are using this your 5 minutes, like you said, will you check what your 1 hour is doing? Will you allow that one to determine what you are going to do on your 5 minutes, or is just your 5 minutes you mainly use?
Okay, okay, okay. Now, let someone want to say something. Who else? Okay, let me quickly explain now. What do I see now? Now, on the 2 hour time frame, now directional bias tool is good. Directional bias tool will allow you to know where markets, which bias are you seeing in the market. Now, I gave out this analysis to the free Telegram community. I'm going to drop the link after this video. Let me try to share it with you guys. Where is it? Let me try. Let me give you what I saw that made me. Now, if you guys look at my screen right here now, I knew price is going to go bearish because as from the higher time frame, which is my 2 hour, I go from higher time frame to the lower time. Now, the time frames me I like to use. I'm not saying there's a specific time frame for this type of setup. I'm not saying that, but the way me I do the way my own trading plan is my main my this is my time frame from the 2 hour time frame to the 15 minutes to the 5 minutes. Those are the three time frames me I like to trade. Those are my trading plans. From the 2 hour, the 15 minutes, then the 5 minutes. Those are my own trading plan. The 2 hour time frame will give me my directional bias. Where is price coming from? Then where is price going to? Where is price coming from? Where is price going to? On Saturday, I gave an analysis right here that price is coming back to grab this liquidity. Now, let me go back into the group. On Saturday, I gave the free Telegram group that market is by your main bias for today on BTC should be bearish because as soon as markets grab this liquidity, which is an external liquidity right here. External liquidity. Market was coming back. Market is giving us a blue pattern right here now. You can see is a blue pattern that is forming. We have liquidity before a break of structure. This is blue pattern. Let's just delete it. This is blue pattern that is forming right here. We have a break of this high, then we have a break of this high, then we have liquidity before a break of structure. I gave them the analysis that on Saturday, your bias should be sell to buy. So market did the same thing. As market spiked up, Market spiked up. On the 2-hour time frame, I could see that market is reacting at the at this breaker block, which is the 2-hour time frame, which is my own bias time frame as per from the higher time frame. The 2-hour time frame is my higher time frame, and the 4-hour. I'm not saying there's a specific time frame you'll be looking for your directional bias, but my own directional bias starts from the higher time frame, like the 2-hour time frame or the 4-hour time frame. Right here now, I gave them the analysis that your main bias for today on BTC should be sell. So as I have this on my higher time frame that price is selling, price already made the move. Now, this is it on the 5 minutes time frame. Market is in a order block. If you guys remember vividly, market is in a breaker block right here. This is the 5 minutes chart now. So I kept on looking for sales to try to catch a trade right here. This is a long swing trade now, as I've analyzed already. This is a long swing trade because I'm expecting more bearish for BTC to take out all these fair value gaps. So I was looking for a trade on the 5 minute time frame. We have a break of structure right here, but there is no liquidity. But markets gave me that confirmation, which is this one I'm talking about now, which is this guy. We have a liquidity sweep, which is this one. Look at it on the 2-hour time frame. Where is it? I know 15 minutes, not the 5 minutes. Where is it? But market gave me that confirmation. I didn't see this in time, but market gave me that confirmation before going bearish. We have a break of structure towards the downside, then start going bearish. Later on, I sold price from this level. Market swept this liquidity. Then which pattern is market trying to form here right now? So directional bias is very, very important. We have this guy, then boom. Which pattern is market creating right here now? This pattern. Where is it? I think I showed you guys. Now. Where is it? Okay, this now. This pattern in a sell form. This is it right here now. A bearish trade in this pattern right here, but in a bearish form. That's what I took this trade right here now. This is also a break of structure. I was expecting market to come back into this liquidity before going bearish, but market did not come, as you can see right here now. Now, my main point is that start from the higher time frame. Like the 4-hour time frame or the 2-hour time frame. Have your directional bias. Then go to any time frame like the 5 minutes or the 15 minutes and look for any sell setup, which is the hot pattern or happy pattern, or the sell form of this too also. You can call this the black pattern. The hot pattern, the happy pattern, or the black pattern. So I kept on looking for that sell setup. I have one right here now. But I missed this trade, but I analyzed it. I missed this one, but I was able to catch this. So have your directional time frame, which is the 2-hour form or 4-hour time frame, as per from the higher time frame. Not saying you should use a specific time frame for your analysis, for your directional bias. Please, we're having less than 1 minute left. So if this Zoom call happens to end as I'm explaining to you guys, I'm going to drop the video after the Zoom call. So don't worry, you can watch it later. So on Wednesday, I'm going to send a link after the Zoom call ends now. I'm going to send the link where I drop my daily signals and my daily analysis. I'm going to drop the link after this. But make sure you guys also come on Wednesday so I can explain the type of POIs and the rules that may I pay attention to be able to select a good POI. So that will be all for now. So thanks for joining, guys. I'm going to drop the link. Don't worry, Mr.
Thanks, bro.
You're welcome.